All right, guys and gals, this is Blake Morrow. You are listening to the Morning Edge. I hope you guys are having a great day ahead of the ECB. It's obviously pretty quiet out there in FX land, but I have to mention there's a few things that I think are percolating below the surface that we need to discuss. One of them being the dollar yen. The dollar yen is obviously pretty firm right now. And it's bouncing because of yields. I mean, obviously yields are moving. Dollar yen's ripping. If you were looking at this wedge as possibly holding, it is breaking to the upside now. So you can see it. There's like a nice little wedge that has developed. So now you have to start thinking about what upside targets are for the dollar yen. I'm not a huge dollar yen trader at the moment. I have not. I as I was telling some guys in the chat room yesterday, I just don't have a really good feel for the dollar yen right now. I think it's being pulled in a couple of different directions as far as yields go and as far as risk appetite and risk aversion goes. So I'm just not having a good, like I said, I'm not getting a good read on it. But that doesn't mean it's not tradable. I think a lot of you guys are really, I think most people are better dollar yen traders than myself. But what I will notice is that we have some pretty key levels probably coming up for, as a target right now for, hold on one second, please, for the dollar yen. And so that resistance right now is going to be, in my opinion, right through here. Okay. That's going to be the 110.65, which is going to be the 618 retracement. Let's get rid of this previous fib so that we can remove that. I'll revisit that here in a minute, but or a little bit later. But this is the 618 retracement. I do feel that that is going to be, good resistance going into today if we can get up there. So I'm going to write that down. Where's my bias chart? I thought I had this up here already. So 110.65. Just going to go ahead and put that down. 110.65. I think it's bullish near term that we're coming out of this this wedge, and really like intraday, you could probably see this more like an inverted head and shoulder pattern. Just this really quick. Okay, probably see it like an inverted head and shoulder pattern. That means good support's going to be through these levels right here, and I'm going to reference that for today. I don't think we're going to go all the way back down to 109. I think this is the key support moving forward, but I think intraday support's going to be through here. So those lows or that level will probably be around the 109. I mean, I'll write down 109.65, but I think it could even be ahead of that. So okay, that's going to be your support. And this is going to be your range. And the dollar yen is in a range. I don't think it's necessarily bullish at this moment, and I don't think it's necessarily bearish. I think that we are in a kind of a nasty little range, maybe even an ascending an ascending channel or something like that. But I think that we are range bound and just got to be careful with the dollar yen. Like I said, I'm not comfortable trading it. I don't have a good read on it. So, there's that. Let's talk about the dollar Canadian, because it's coming right down to where I have some bids. So let's talk about it. Here is the breakout point for the dollar CAD. Okay. There's the 200-day moving average just below. So I'm going to go ahead and just say that this high comes in at 126.53. This high right here comes in at 126.47. So that's going to be 126.50. My bid is hit right. Hold on. My bid will get hit right Almost, almost, almost. Come on. Hit me. Hit me. Literally, my bid is like, whoops. I don't know if it's going to hit me. Anyway, we have support at 126.50, and then 126.20 is the 200-day moving average. So I'm going to say 126.20. Whoops. 126.50. And my bid should get hit right now. Right now. Come on. Sorry, guys. I'm just in the trying to get triggered. All right. I got triggered, I think. Did I? No, not yet. Dang it. Hold on. Orders. It won't let me do this. Hold on. See if I get triggered here. Come on, just hit my bid, for crying out loud. Sorry, guys. You guys, I have to apologize. You guys know doing these webinars and trying to trade at the same time is not always the easiest thing to do, as you can imagine. Come on, for Jiminy Christmas. It won't let me. You know what? I'm going to do it this way. You cancel my order. Okay. Now let me mark this up. Here you guys go. Long dollar Canadian, 1/2 size, 126.52. There we go. You guys can see that's our trades room. For those of you that are not, if you have just a light version. So I am now long. Sorry, just looking at something else really quick. Okay. So anyway, there's that. I think this is a flag developing. We could dip back into maybe into the 30s, but really resistance is going to be right here at 127.30. That's going to be intraday resistance. Let's go 127.30. Bullish, because this is a bull flag pattern, right? I know it's coming off right now, but you know, stocks are going higher, so you'd expect that. Let's go through the euro. Here's the euro. So still in a wedge. Support is at this point in time 117.50, resistance at 118.25. But I want to go a little deeper than just what I said there. 117.50, 118.25. Now this is bearish, and the reason why I think this is so important, is because even though stocks are stronger, the euro is weak. And so the risk, I know I said this the last couple of days, but the risk here is if stocks come down from where we're currently at. Now, think about what we talked about yesterday. Yesterday on the S&P, we said, hey, if we break the 4290, we're going to test 4340, right? That was our analysis yesterday. Think about, that. We looked at the S&P. You can see here's the S&P right here. We said if it breaks 4290, we're going to go to 4340. So we did. Broke 4290, went to 4340. Now we're here. Previous support is acting as current resistance in the S&P. So let's say the S&P gives up these gains and we trade back below 4,300. Then you have to ask, what happens to the euro? My fear is the euro could break. And if it does, where are we going to go? Well, this we're just thinking ahead of the ECB here. But if you look at just, the longer term fibs, this is the daily chart, the high being right here. Your 38% fib from (2020) low to the high right there comes in at basically 117. So that's our next level support in case 117.50 breaks. And you have to imagine that can happen. I mean, if I was long the euro, which I'm not. Okay. Can you guys see? It's 6 o'clock in the morning. Can you guys see me this morning? I had a meeting earlier this morning, so my hair's a little jacked up, but I kind of feel like I need to talk to you guys. I need to talk to you guys on camera because I want to make sure I kind of I don't know what's the word. I want to accentuate what I'm saying here is that if the euro, cracks this 117.50 level, I think the risk is that we break through that support really fast. And if I was long the euro, I think that would be the risk, right? Because if I'm long the euro and I just saw this big rally in risk over the last 2 days, I would be crapping my pants right now. I'm not long the euro, but that's what I would be thinking. So anyway, I just wanted to make sure I talked a little bit about that. All right, now where's resistance? Again, resistance is at 118.25. Let's go to the sterling. So I just shorted some sterling here. I'm going to add a little bit. I shorted a little bit because I wanted to sell into this bounce. I think we could bounce all the way to 136.65. That should be resistance. I just don't know if we're going to make it all the way up there today. This is a big double top. Do you guys understand? This is a big double top. And given the fact that the sterling can't even get back above there is a risk. The 200-day moving average comes in at 137. So I'm going to mark that up. And just in case we squeeze a little bit, 137 would be the next resistance. It is bearish. Okay, support for the sterling right now comes in whatever those lows were. Let's go ahead and reset that chart. Comes in at 135.70. Okay. All right. Let's go into the Aussie dollar. Same applies. Aussie retail sale numbers were weak. That allowed for that spike down to the 161% extension, down to 72.90. Didn't we write that down as support yesterday? 72.90, right? That was the overnight low before bouncing. 72.89, 72.89. How important is that level? Obviously very important. Resistance now, we could write down 74 cents. You have to remember Australia is in a lockdown right now. I think the Aussie's trading extremely heavy, right?
What happened when they locked down? Where they had like 20 cases or so.
I know, it's crazy. We haven't been in lockdown. We haven't been in lockdown since 2020 March. That's how silly it is for us.
I was actually joking, but I find it scary. I'm just checking at the data. They have something like 120 cases per day. They locked down a country for 120 cases of COVID per day.
Wow. I have 120 cases of COVID per day, like literally within a mile radius of where I live. So
And
maybe
people
even
actually
maybe
accept
even a
that.
half a mile radius. What's that?
And people actually accept that.
Yeah,
I
I
mean,
know.
getting like deprived of all the freedoms, etc., for 120 cases
It's crazy.
with vaccines being out there. I mean, I don't know. Things have started not making sense to me,
Well,
really.
when have they really made sense, Steve? I mean, honestly.
Yeah, but I think it's got worse.
Right. Okay. Hey, let me finish up this analysis. I know you want to take over, but I'm going to just wrap this up really quick.
No, I'm not in a hurry. Don't worry. Do your thing.
Oh no, I am. I've got to use the
I
restroom.
know you are.
I gotta go. I'm trying to. Anne says half the country is in lockdown. Yeah, that's crazy. Anyway, all right. So we have this bear flag pattern in the Kiwi. Now, the thing about the Kiwi, and this is really tricky. I want to make sure I mention this. We had a sell-off yesterday. You know, we were below wedge support. We came down and we closed right at 69.20. I mean, right now we're at 69.20. I mean, um, I'm sitting here thinking, why? I mean, you know, if I was short, I'd be like, damn, I don't want to be short anymore. But if I got long because I thought there was a false breakdown, I'd probably be thinking, crap, I don't want to, I don't want to be long. This thing can't even bounce, you know, even with risk appetite bouncing. So anyway, I'm going to reference this trend line that comes in at 70 cents now. That's going to be 70 cents. I'm going to keep it at range just because of the possible false breakdown last night. I mean, yesterday, I'm going to write down support as being 68.80 because that was yesterday's lows. And I think I'm going to just leave the Kiwi alone. I mean, I haven't traded the Kiwi really too much over the last couple of weeks. So it's just, yeah, I'm not super excited about the Kiwi at this time. You got to, you know, risk that's a little wobbly that's keeping the Kiwi trading heavy, but then you have a more hawkish RBNZ. So, you know, there's your risk. We talked about the Canadian, that's in a flag. Swissy, the rally in yields has pulled up the dollar Swiss, but I still feel that this 92.70 is really critical resistance. Okay. And I'm going to just say 91, 92.70, and there's nothing to do with this thing unless you get close to 91 cents or you get close to 92.70. I don't think there's anything to do with the Swissy right now. Dollar index, I mean, you know, if you're short the dollar right now, if you're short dollars right now, it's probably one of the more, if not most, frustrating trades, and you're probably getting a little, frustrated, rightfully so. And the other thing is, if you're short the dollars, what you have to be aware of is that we're trying to pop our head out of this triangle. So the end of the week, you know, we close above this 93-cent level in the dollar index. I think we're going to be trading towards, 94, 94.50 going into next week. Now, that doesn't mean that we're going to do that. The dollar index is really going to be a product of the ECB tomorrow, right? I mean, if the ECB is dovish, the dollar index is going to break out. It's the only way we got to look at it. 93.20 is resistance. That's the top of this wedge. 92.65 is the lower end of this wedge. So 93.20, 92.65, and it's bullish. But we are in a wedge, and we're either in a wedge or, we're in just an ascending channel. It looks something like this, right? And I'm not sure. It looks something like this. So this is where we're at currently, and that's what we're dealing with. So it's either in a wedge and we come back down towards channel support, or, I can't physically turn bearish unless we get below this support here. I just can't do it. Okay. All right. Nice bounce in risks. Stocks are bouncing this morning. Hold on really fast. Just take a look at everything. I mean, you know what's not going down? I'll tell you what's not going down is the dollar Mexican peso. And that's very surprising. And we might as well go into it. We have stocks bouncing, the dollar's, kind of selling off, especially if you take a look at it against the Canadian and Norway. We're seeing a little bit of a pullback. I think that's more because crude oil is back at $69 a barrel, bouncing from 66. But look at the dollar mex. Yeah, we break above these highs. I think the next resistance that we need to be aware of is 2035. Right? And I don't want to pull us out of the range yet. I'm going to keep us in range, but I think dips now to 2010 are going to be pretty well supported. So US dollar, Norwegian krona, we're flagging. Matter of fact, let me do something really quick. Low to high. Support 618, 90.42. 9.42. This is bullish. Resistance, obviously, well, intraday is going to be 9. Wait, I'm sorry. 890.42. So this is, I'm sorry, that's wrong. 890. Set 9. Then beyond that, my dyslexia kicking in. 90, basically 9, 10. There we go. That's correct. Okay. All right, got it. S&P. Again, we are up against resistance, guys. If you're chasing risk higher, so let me say this. On video, okay, just so you can see me. If you're chasing risk higher, what does that mean? Chasing risk. That means you're short dollars, you're long Aussies, or you're long Kiwi, or whatever. You're short dollars. Be careful. We just popped over the last 36 hours. We're probing a 618. We could get up a little higher, but this, let me delete that really fast. This is previous support. It's all acting as current resistance. So we could make it as high as, let's say, 43.50, but we're pretty much there. So be careful being, short the dollar right now. So I'm going to write down 43.52. Then, because that's the top of that resistance here, then I'll write down the highs, which will be basically 4,400, right? Because that would be next. Support, I think any dip now down to this wedge support, which, by the way, this is obviously, it's my trend line. This wedge support could be here, could be there, could be, these lows are all going to be pretty important. So this is going to be 42.90, which was an important resistance that we broke yesterday. So it'd be 42.35 and 42.90, because that 35 comes in right there. Right. All right. Okay. And then precious metals continue to trade pretty poorly. Gold 1835, 1755. 1755 is obviously critical support. 1835 is the rejected 50% retracement. We're in a range. Now watch silver here. Silver, remember yesterday, we were here and we wrote down 2480 as being support. We came down to 2473 and then bounced. So how important is this 2480? Now it's really important. Yesterday it was important because we knew it would be support, but now it's really important. That's why I put double asterisks there, because I want to accentuate the fact that if silver breaks this support, we will probably trade back down towards the mid 20s or low 20s, like 22. I think is very doable. I'm long physical silver. I don't want it to see it go down there, but I think it's possible. Resistance 2550. Bitcoin 32,500. Whoops. And you guys know, as long as we're below 36,500, it is bearish. And support is 28,600. That's key. Whoops, that's key. And we retain a bearish bias. So there you go. Your bias chart is finito. It's all yours. And Steve and Stelios, how you guys doing this morning?
I'm very well, thank you.
Good.
Slight cold, but I'm fine.
Did you lose your sense of taste?
Yeah, and smell too. Why is that a problem?
That's weird. That's a weird thing to happen. Just kidding. I know it's not a joke. No, it stinks when you have a cold, especially in summertime. Isn't that weird when you're like, it's hot and then you have the sniffles?
Yeah, I think it's the air conditioning, but anyway.
Yeah, probably right. Hey, Steve.
Hey, mate.
Is the video still on? I don't even know if the video is still on. I had
no, it's not.
Yeah, we can see you naked.
No, I'm not naked. Anyway,
that's not you, sorry.
Yeah, that's so what's up, guys?
I guess we're all waiting for the ECB tomorrow.
Yep. So we're seeing a bounce in risk again, but will it sustain? I guess that's the question, right?
I think the question is, will any sell-off sustain, not the bounces? The bounces, I think, are given.
Right.
But
right.
yeah.
Well, guys, I'm gonna pass it over to you. I've got by the way, Brent Donnelly. I've got an interview with him today. We'll probably have that interview published by the weekend. So you guys get ready for that. That's going to be a really, really cool interview that I think all of you are going to enjoy. And so be ready for that. I'm going to pass it over to you guys, though.
Thank you.
Thanks, guys.
Thank you, mate.
Well, not much more to add from FA.C.E. We're not seeing much of a move. I mean, risk is bouncing a little bit. Cryptos are doing very well for a change, and excuse me. And metal's trying to decide what they're going to do. It's interesting that Blake mentioned gold near the end, and remember when gold was hitting what was it, 1900 in June?
Mm-hmm.
I was saying that we were all saying that we're very bullish medium term, but I could see it easily going down $100, and I think I said 1750, but anyway, which is kind of support. But it can go lower. Gold and silver can go lower for sure. But I remain adamant in my view that it's going to be a huge buy if it does, and I am waiting. I'm not wasting my ammo. I'm waiting and waiting to see if we can get there.
I totally agree.
Otherwise, very little movement in in markets. Equity is a bit higher. Bonds still undecided. Obviously, they excuse me. The 10-year US is going higher. It's what 127 now, but
yeah, look at this. They squeezed the longs or the shorts if we want to talk about bonds instead of yields, right? So they squeezed the longs. We broke through this channel, and now we seem to be building a morning star formation, and about to break back within this channel. So this might have been a very devious overthrow below this corrective channel. I wouldn't be surprised if we just see, moving straight higher from here.
Yeah, it could be. And I think we talked about it on Monday when the
well.
speculators on the COT had finally turned bullish bonds, and
so bearish yields.
Bearish yields, so they're being taken out probably now, or close to.
Yeah. I mean, we've already gone from 113 to 128 now within 1.5 days. It's a decent move for 1.5 days.
Well, it's a reversal of the move before. So
yep. Now we've completely erased actually the day that brought us below this channel and below the 200 daily moving average. So in my opinion, you want to be bearish yields. This is the place you want to be short. But if we break above where we currently are, so back within the channel, back above 200 DMA, yeah, I don't think you should stay in that position.
Yeah,
because
indeed.
we have the potential of squeezing higher. And, I think it's an unavoidable inevitability to move higher in yields. Despite all the direct and indirect manipulation, so on and so forth, it's impossible to have medium to long-term yields at, where we currently are,
with inflation at 5%,
being above 5%.
Yeah.
I mean, it's just impossible.
Yes. Oil is actually ripping again. Any idea why?
Yeah, and the DXY, by the way, once again, ahead of the ECB getting rejected from this ascending wedge trend line resistance. So we were positive on the day, exactly as yesterday. And now we've pared back actually all our gains and we've gone slightly negative. So I don't believe this wedge is going to break today. It's going to be much easier and much more likely to happen tomorrow, post ECB. The exact opposite type of wedge here. But keep in mind that in the case of the Euro USD, it's not just this descending wedge if we're talking shorter term. It's also the symmetrical triangle trend line support that passes from exactly the same level if we're talking medium term. So, it's very, very hard for me to be bearish the euro exactly on top of those two supports. I mean, it makes no sense selling something on top of two important supports. We break through this and we close on a daily closing basis below it. Sure, absolutely. We do open the downside for more losses in the short to medium term. But, being where we currently are, if I had to be something, I would have to be long instead of short because the risk reward is just too good.
Yes, good point. Okay, I don't have anything to say, so
me neither. Okay, so bye-bye, everybody. Yeah. So in general, today we're seeing. You mentioned crude oil, by the way, Stelio.
Yes.
Having to do with crude oil, I mentioned it before, but you were already gone on FA.C.E webinar. Crude oil is actually trying to post a morning star formation. We had that massive down day on Monday. We had then a textbook indecision candlestick yesterday in the form of a doji. And today we're seeing a very, very big up day. Not as big as that massive down day, but in order for a morning or an evening star formation to form, you don't need the third candlestick to completely retrace the first one. You need the third candlestick to retrace at least half of the first candlestick. And we're already there. We've already retraced more than half of the candlestick that we saw on Monday. So crude might be also forming like a big bullish reversal, of course, with two side notes. So side note number one, it's still very early on the day. So what looks like a morning star formation now might not be a morning star formation by the time we close the day and we form the candlestick, because this is a daily candlestick, right? And note number two, as I mentioned on Face webinar before, 6950 is an important support resistance area, and we're currently testing it as a resistance. So bottom line, this is a good level if the bears want to remain in control. This is a good level to have this rally stall and continue to the downside if that's what crude oil wants to do, which is very likely given the nature of this massive bull trend from 11 in the continues to 77. We can extremely easily see a deeper correction than what we've seen so far, right? So in my opinion, 69.50 is an important pivot area that's going to point to the right direction. So that's what I think about crude oil. And from what I'm seeing today, tomorrow should be important days to determine what's happening and where are we headed from here. Are we headed lower for a bigger type of correction, or that was it, a sharp, short-lived corrective move as we've gotten used in seeing in equities, and straight higher from there? We're going to find out rather soon. Now, let me open the question box and see what you guys want to say. Half the country is in lockdown. Yeah, absolutely. By the way, I joined a little bit late today, like 10, 12 minutes after Blake started. So if you posted any questions during the first like 10, 12 minutes of the webinar for me to see later, just keep in mind I can't see them because I wasn't logged in, right? So if that was the case, make sure you repost your question. Otherwise, I'm not going to know you asked for it. Now there is a comment about JPY. John says JPY is weak. Let's have a look at the USD yen. And yes, the USD yen seems to be rebounding. Now the bullish case scenario is that this pullback was a three-wave pullback in the form of this pennant, in essence, right? In which case, yeah, we're trying to break through it, and that would open the door for more upside, right? So that's the bullish case scenario for USD yen. The bearish case scenario for yen itself, right? And against the lows that we found the day before yesterday, it looks like a decent trade, right? But I think the jury is still out. I mean, I'm not yet very confident that that's the case, right? Not yet. But we break through this and we start picking up in momentum, and yeah, yen should be on its way higher. And in any case, this pullback didn't really bring any overbought, any oversold RSI readings as well. Momentum was not really there. We had like a couple of strong down days, but other than isolated days, not really, a waterfall type of move to the downside. So, looking back to March and what has transpired since then, I still fail to see the market having any real direction that has momentum behind it. So I fail to note any impulsive direction, right? So bottom line, I wouldn't be easily jumping onto either the short or long side of the USD yen at the moment. Now, I was looking for weakness in USD yen simply due to the nature of the move higher, which was 100% corrective. But on the other hand, uh, so far I'm not seeing an impulsive nature in the move lower also. That's why I'm insisting in being neutral until I see something that inspires, that the market has found direction once again. For the time being, I think the direction is more or less neutral, so there's no direction. So moves seem to be very short-lived. Well, USD is second weakest. Check pound yen. Yeah. I've talked about the yen pairs, all of which today, because I was watching them before, all of which today are trying to form morning star formations, right? So here is a potential morning star formation in the pound yen. Here is a potential morning star formation in euro yen. Here is a potential morning star formation in the Aussie yen. You get it, so on and so forth. Kiwi yen, right? And keep in mind that the only yen pair that had broken through what might as well have been the corrective pullback was the Aussie yen. So I was wondering yesterday, I think we had this conversation. So I was wondering out loud, was the Aussie yen leading the rest, or was the Aussie yen producing a false breakdown? And, for good reason, the rest hadn't followed lower. So, I think we're going to find out very soon. To be honest, though, price action so far today is pointing to possible reversals higher, which, given the prior trends, are not easy to be faded, right? Because I remind you that we had very strong moves to the upside, and mostly corrective pullbacks following that, right? So, we close like this today in all these yen pairs, and it's not going to be easy trying to be in the short side, because these are big reversal indicators, right? Hi ho. Hi ho, John. Okay, so what do you guys girls want to look at? I mean, I'm at your disposal to answer any questions you want. For some reason today I don't see so much um, action in the chat room. Usually we have tons of questions. The CAD yen, yeah, absolutely. My omission, actually, because I mentioned several of the yen pairs, and CAD yen should have been among them. So here's the CAD yen, and here is the corrective channel I was looking at, right? So we're back within it as we speak, right? We formed a tweezer bottom yesterday, and today we seem to be producing some follow through. So we closed the day back within this channel, and I think there is a chance that we found a low here as well, right? Too early, but I'm getting myself ready for the reason I mentioned before, because I am seeing all these reversal candidates, and if we close the day like this, and we proceed during the rest of the week, the 2 days left, I think that it's very likely that yen pairs have found a low, which of course will also imply and will also be helped by equities proving that they found a low, right? So as you understand, those go hand in hand. Yields doing a false breakdown initially, now trying to invalidate that false breakdown. More or less the same has happened with many of the yen pairs, right? S&P finding support at the wedges trend line support. So all these go hand in hand. I mean, we see, for example, stock indices break lower. Most likely the yen pairs will continue lower as well. Most likely weakness in yields will continue as well. But on the other hand, we see this stabilization in equities not being temporary, but just being, the continuation of the previous usual trend, then everything else will give, meaning, yen pairs should continue their move higher, yields should produce a very, very nice rebound to the upside, so on and so forth. Also, another link in the chain is going to be, and I mentioned these yesterday, the euro and pound crosses, meaning we see a return back to risk on. Besides all the rest, euro Aussie will probably prove to have produced a false breakout to the upside. Euro Kiwi, which didn't produce a false breakout to the upside, is going to break to the downside. Pound Aussie is going to get rejected once again from this channel and turn lower. And Pound Kiwi is also going to head lower to eventually break down from this channel, right? So another FX chain link, to this chain of events and correlated markets is definitely going to be these crosses, right? We go back to risk on, and besides everything else that I mentioned, these should turn lower and eventually lead to bearish breakdowns. Question about the IWM. Yes, the IWM might have also produced a false breakdown, right? Because we did break down from this triangle trend line support. We actually even gapped lower from it, which is like a very strong way of producing a breakout in either direction, right? And following that day, we had this massive update yesterday and the continuation higher today. So this might be another false breakdown. So keep that in mind. And given the fact that we're comfortably back within this range, it's a strong possibility. So, I would be very, very careful being short IWM. If you shorted IWM because it broke down, it was a good trade, right? Good trade doesn't mean a trade that makes money. Good trade means a trade that has good parameters. That's the only thing you can control as a trader. There is absolutely zero chance that you're always going to make money. Zero chance. There has never been a trader that has done that, and there will never be a trader that will do that ever in the future, right? The only thing you can do is take good trades, meaning have good parameters like good entry, good justification, good risk reward, and that's all you can control. You can control the rest no matter what you do, right? So if you sold the breakdown, that was a good trade, but it failed, and it is what it is, right? TLT. We had a look at TLT several times, actually a couple of times. And if you remember, I mentioned this when we were back there, and I didn't change it the last time we revisited this instrument, right? We did initially break through this channel, and I've kept it because it might work as support in the future, but we never broke higher from this descending trend line resistance. Notice also the other side divergence that has developed here. So bottom line, I would be very, very, very skeptical about being long. Very skeptical. I think there's a very good chance we're turning lower, and I drew that several days ago, right? And so far, it seems to be playing out quite nicely. We did rebound to get close to this trend line resistance. We did post yesterday a super, super bearish candlestick, right? What's that? It's a bearish engulfing. We opened the day higher from the highest level of the prior day, and we closed the day lower than the previous low. So we fully engulfed the price action we had on Monday, right? And that's a very, very bearish reversal signal. So keep that in mind. Given the fact that we never broke through this trend line resistance as well, I think that at the very least, if we don't even want to consider the fundamentals, right? Because somebody can make immediately the argument that, F the fundamentals. Who cares about the fundamentals? Fundamentals do matter, but in the long run, and who knows if, in such a short period, you should even consider them, right? So just completely ignoring the fundamentals, just from a technical perspective, I think it's, it makes sense to be short instead of long here in the TLT. Anything else before we wrap it up for the day? A size silver. Do I remember right? Yeah, no, it's not silver, but it's an equivalent product. Yeah, I mean, the fate of this. Let's look at this chart. So, to start with, we have this. We have a shorter term formation here. Yeah. Some kind of a larger corrective pattern, a smaller one within the larger. So to begin with, before you take any direction, I think you should be monitoring this symmetrical triangle, right? We break through trend line resistance. We open the door for a move towards that trend line resistance. But as long as we trade like anywhere between 83.5 and 112, whatever it is, I think you have to be neutral. We break through that. You can be short-term bullish and look for a push towards that trend line resistance. To be longer-term bullish and to believe that another big move is starting the upside, we need to see a break above that. That's what I think about this. Moderna, nothing has changed. Like a very, very bullish trend. Yes, we had a very, very big indecision day yesterday. And this might produce some kind of a pullback, but I think that no matter how you look at it, this is a very bullish market, and any pullback should probably create buying interest. 260, I think, is strong support. The previous gap, we might feel, worst case scenario, I think we might feel that gap and continue higher, right? Do something like this. London precious metal fix a few minutes ago. Any thoughts on the action each day at 9 a.m. CST? Listen, a lot of weird things are happening. Yeah, a lot of weird things are happening with the metals, and I've talked about it with Stelios multiple times in the past. I think the financial aspect of the metals is heavily manipulated, and this is not a conspiracy theory. During the past few years, there are so many banks and institutions that have been fined for manipulating the metals market, right? So it's not a conspiracy. I mean, we used to say that with Stelios since years ago, but during the past few years, all these fines and accusations have in essence justified the assumption that there is a lot of manipulation happening, which it's very easy to see in some extremely weird type of price action that is completely abnormal. One example we've given multiple times with Stelio is how you find so many sell-offs in gold and silver during completely liquid hours. Nobody wants to get rid of a big position during the most liquid hours of the day, right? Because they know they're going to get the lousiest price out there and manage to move the market a lot, and they're going to get really bad fills. And no trader on the planet is ever going to decide to execute like this while they can wait just a few hours and get a much, much better price. for their order, right? And for some weird reason, the opposite extremely rarely happens. So, the comparison between days that you have very sharp moves during liquid hours to the downside, to the comparison of that happening to the upside is like, I haven't done the statistics, but just from my experience, like 6-1 or something like that. And that on its own is like a big red signal to me, right? So a lot of weird things happening with the metals. There is a lot of effort to keep the metals subdued, and unfortunately, the fate of the metals is mostly in the financial markets because the volume of supposedly metals being traded there is multiple times the volume of what we actually have extracted from earth, over thousands of years that we're extracting gold and silver from earth, which means that it's a market that's completely distorted to reality. And that is the reason you've seen since COVID, especially during a large period of time, a very big gap between the financial market price and price to actually buy physical, and huge supply shortages, right? Which doesn't make sense, because whenever you have a supply shortage in something, the market self adjusts itself by um, by using price to create an equilibrium, right? Yeah. So anyhow, don't get me started with the metals. A lot of weird things. Steve, any thoughts on why yields are so low with inflation at current levels? Because the bond market is hugely manipulated, indirectly and directly, right? Listen, I explained the other day, probably you weren't here, Jason. There is a train of thought that has to do with the bond markets being 2 steps ahead and probably considering that the increased inflation is going to produce a reaction from the central banks. That reaction from the central banks is going to produce another recession or financial crisis or a combination of the two. And that will cause central banks once again to do tons and tons of QE, slice rates back to zero after supposedly initially like hiking them, so on and so forth. I fail to subscribe to that theory because I can't accept that the same market that completely failed to price in the upcoming obvious increase in inflation has suddenly gone from pricing in 0 moves ahead to pricing in 2 moves ahead. So, in my opinion, the explanation is much, much simpler. Unfortunately, the fixed income markets, especially when it has to do with government issued bonds, is extremely manipulated because the biggest buyer there is central banks themselves. And I think that that's as simple as it gets, having to do with an explanation. Related to pharmaceuticals and vaccines, says Laura, NVAX. Hmm. 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 It would feel very, very bullish if it wasn't toying around with this trend line resistance. But in the short term, I think that things are rather simple, right? We have some kind of a rectangle here, and you should watch this for direction, right? So 232, but alternatively, we go down and we break back through 160, let's say 165 for safety. we trigger a double top, right? And that's going to be quite bearish because that's going to have a target. Let's see. Of like 96 or so. So yeah, watch this little rectangle, and whichever side we break, I think we extend. Rada, let's see, what is that? We had a look at it some time ago. I talked about the symmetrical triangle. It's still in play. It's still in play. More likely to break to the upside, right? Keep that in mind, given the prior move. But we're still consolidating in this symmetrical triangle. DDD. Okay, we seem to have predicted this correctly. We broke down. We're seeing some follow through. Yeah, I think that as long as we trade now below 33, roughly, I still favor the downside below 33, right? So I wouldn't be buying it as long as we trade below 33. As simple as that. TLRY, and I wrap it up with that because I have to jump in a meeting in 13 minutes, and I haven't even had chance to have lunch today. So let's extend a little bit. Okay. Let's see if, along with everything else that we saw previously, we had a little false breakdown in this market as well, right? Yeah, this is actually quite a key area, right? Yeah, I would be careful being short here. We break through this zone, I think we're going lower, but there is a chance that for the time being we created a false breakdown in this one. Rumor is a short squeeze in natural gas as fundamentals aren't as good as high price. Can you spot that in your technicals? No, I don't think the technical picture says so for the time being, and I'll explain why. I'll tell you why I don't think this is a high likelihood. Because we've been building on a big bottoming pattern for quite some time. We created a lower low here. We created a rectangle. We broke above it. And since then, we've only had sequence of bullish formations. A rectangle breaking to the upside, completing the formation. Creating a big symmetrical triangle, taking its time, breaking to the upside, showing having momentum so that this was indeed a valid breakout. Shorter term symmetrical triangle, breaking to the upside, having the equivalent momentum follow it. Sorry, I'm not seeing anything here that this is a short-lived, sharp, short-term type of move that you usually have with squeezes. So, Michael, my assumption would be that that's a very low probability scenario. I'm seeing like a bigger theme, technical theme here in the natural gas market on the chart. Okay, APPH, and I'll have to wrap it, guys. Same deal, just not the false breakdown with the previous stock you showed me. This might as well be a very nice descending wedge, right? Might as well be a very nice descending wedge. And we're currently testing resistance. So we might be seeing a bullish breakout like imminently. Now, admittedly, right, the overall technical picture is not like super, quite the opposite. But I think that even as part of a larger corrective move here, I mean, even if we are to head lower, we might first see something like this, right? So I do think that in the short term, it doesn't look bad at all. Okay, guys and girls, thank you for being here, and I'll see you again tomorrow. Have a wonderful rest of the day.
Thank you, Steve.
Thank you, Stel.